Hey, are you looking for stocks that could potentially skyrocket in 2023? Well, you've come to the right place. Welcome to my channel where I cover everything related to finance. In today's video, I'm going to unveil a list of the top stocks that I think you should keep an eye on for the upcoming year. So, let's jump right in. Chapter 1. Why these stocks? Well, now that we're all set to explore the top stocks to watch for 2023, let's take a moment to address a few important points. It's crucial to remember that investing in stocks should align with your personal financial situation. If you're new to my channel, I highly recommend checking out our guide on how to invest in stocks. It covers essential topics such as establishing an emergency fund, asset allocation, and finding the right stocks that suit your needs. I want to emphasize that the stocks I'm about to share are primarily considered long-term investments. While I can't predict their short-term performance over the next few weeks or months, it's important to note the potential impact of certain factors. Variables like prolonged inflation, higher than anticipated interest rates, or even a significant economic downturn could potentially lead to short-term declines in these stocks. However, it's essential to maintain a long-term perspective when investing. Now, before we dive into the specific stocks, I want to clarify that the list I've curated doesn't aim to provide a fully diversified portfolio. Instead, these stocks represent my highest conviction choices for long-term investment in 2023 and beyond. With these caveats in mind, let's jump right into the top stocks to watch for in 2023. Chapter 2. Amazon. Well, it's no surprise that my first stock on my list is Amazon, but the thing is, it is criminal to look past the stock right now. Despite a challenging 2022 that saw a significant drop in share value by 50%, Amazon has emerged as one of the 10 best stocks to consider for the upcoming year. It's important not to underestimate the true strength of Amazon, especially when we consider its crown jewel, Amazon Web Services, AWS. AWS, the company's cloud services arm, is not only large and fast-growing, but also incredibly profitable, with an astonishing annual revenue run rate exceeding $85 billion. To put the value of AWS into perspective, let's take a look at its closest competitor, Microsoft. Microsoft's cloud services are trading at around 12 times their sales. Applying the same multiple to AWS gives us an estimated value of a staggering $1.02 trillion. Now, here's the exciting part. With Amazon's current valuation standing at roughly $1.3 trillion, investors essentially get the rest of the company's massive operations, which generated $434 billion in sales in 2022 for an incredible price of approximately $280 billion. As we dive into 2023, Amazon has already demonstrated its potential, with Amazon shares surging by an impressive 55.2% through June 30th. This impressive growth suggests that the market may have overlooked the true value and resilience of this tech giant. With its diversified operations, dominant e-commerce presence, and the ever-expanding success of AWS, Amazon is definitely a stock that warrants close attention as we venture into the new year. So, keep a keen eye on Amazon as it continues to dominate the e-commerce landscape and capitalize on the immense potential of its cloud services arm, setting the stage for an exciting journey in 2023. Chapter 3. Apple. Now, Apple doesn't need any introduction when it comes to buying a mobile phone or a laptop, but lately it is looking like that's the case for its stocks as well. After experiencing a rare 26.4% pullback in 2022, Apple shares roared back with a vengeance, surging an impressive 49.7% in the first half of 2023. In fact, they even reached all-time highs and achieved a historic milestone by crossing the $3 trillion valuation mark for the first time in history. Talk about reaching new heights. One key factor contributing to Apple's ongoing success is its robust competitive moat. As the largest publicly traded company in the world, excluding government-backed giants obviously, Apple continues to demonstrate its resilience and market dominance. The company currently trades at around 32 times earnings, indicating the market's confidence in Apple's ability to stay ahead of the competition. In addition to its existing product lines like iPhone, Apple Watch, and Mac, the tech giant recently introduced its newest innovation, the Apple Vision Pro. This virtual reality headset comes with a price tag of $3,499, positioning it as a niche product in its early days. However, investors are eagerly anticipating the potential for this technology to pave the way for a new and meaningful revenue stream alongside Apple's existing lineup. With its constant drive for innovation, loyal customer base, and formidable market presence, Apple Incorporated, AAPL, is certainly a stock to keep a close eye on in 2023. Chapter 4. Tesla. Now, Elon Musk has become not only the richest, but probably the most famous man on Earth. With him backing up Tesla, it's looking very good for investors. Now, let's rewind a few years back when skeptics doubted Tesla's profitability. Fast forward to today, and the narrative has taken a remarkable turn. Tesla has been proving the naysayers wrong by consistently generating strong profits. With a net income margin of 10% and plans to boost its scale, the company's profitability is expected to continue its upward trajectory. Tesla's journey towards profitability began in 2020 when it achieved its first ever net profit of $862 million. Since then, the numbers have skyrocketed, with 2021 seeing a net profit of over $5.5 billion and a staggering $11 billion in net profit over the past 4 consecutive quarters. Looking at more recent figures, Tesla raked in $3.3 billion in net income in Q1 of 2022, followed by $2.5 billion and $3.2 billion in the subsequent quarters. Now, let's take a look at Tesla's stock price forecast for 2023. Observing the charts, it's evident that the stock has broken through multiple significant resistance levels, setting the stage for a potential retest of the $314 mark, which stands as the next major resistance on the chart. While the current Tesla stock price forecast appears bullish, a pullback seems quite likely. Despite surpassing resistance levels, the price needs to consolidate and solidify those levels as support before aiming for further upside gains. As we look ahead, keep an eye on 2 major factors that could influence Tesla shares in the coming months: upcoming CPI numbers and the rate hike decision by the U.S. Federal Reserve. These factors will likely play a significant role in shaping Tesla's performance in the near term. In the weeks to come, we might witness a potential retest of the next significant resistance level around $315, with a breakdown below $250 serving as an invalidation point. Now, let's fast forward to Tesla's stock price prediction for 2025 and 2030. With the world increasingly transitioning to electric cars, it's no surprise that many experts are optimistic about Tesla's future. Analysts at Wallet Investor expect the stock to be trading above $300 in 2025, while the renowned Cathie Wood believes Tesla could reach over $3,000 by 2030. Additionally, successful fund manager Ron Barron anticipates the Tesla stock price hitting $1,500 by 2030. So, ladies and gentlemen, I want you to keep an eye on Tesla as it continues to revolutionize the electric vehicle industry and captivate investors' imagination with its profitability and forward-thinking vision. With strong growth prospects and an unwavering commitment to innovation, Tesla is undoubtedly a stock that could charge your investment portfolio for years to come. Chapter 5. Dutch Bros. Now we have been covering the big boys until now, and you might be thinking, well, I already knew about these stocks. Let me give you Dutch Bros, my viewers. While established giants like Apple offer stability, it's often the smaller companies that can provide significant expansion opportunities and a boost to investment portfolios. Dutch Bros, a rapidly expanding coffee chain, fits that bill perfectly. Despite being roughly 0.2% the size of Apple, it carries a market value of around $4.7 billion. In terms of revenue growth, Dutch Bros has been on fire. In 2022 alone, their revenue surged by an impressive 48.4%. Starting with its roots on the West Coast, Dutch Bros has expanded its presence primarily in the West and Southwest regions, boasting a total of 716 locations across 14 states as of March. One of the advantages Dutch Bros holds is the relatively low cost of opening its drive-through stores, allowing for faster and more cost-effective expansion. In fact, the company opened a remarkable 133 new stores in 2022, marking a 25% growth in locations. This aggressive expansion strategy showcases Dutch Bros' commitment to capturing market share and meeting the growing demand for their products. However, it's essential to note that Dutch Bros faced a slight setback earlier this year. After an earnings report that fell short of analyst expectations, the company's stock experienced a dip in early May, leading to a minor decline in share price. As of June 30th, shares have shown modest growth of less than 1% since the beginning of the year. Nevertheless, Dutch Bros remains an intriguing prospect to watch. With its expanding footprint, impressive revenue growth, and a unique drive-through model that resonates with consumers, the company has the potential to become a significant player in the coffee industry. Investors should keep a close eye on Dutch Bros as it continues to carve its path to success and navigate the competitive landscape of the coffee market. So, coffee lovers and investors alike, be sure to stay caffeinated and tune in to Dutch Bros Inc. Bros as it brews its way into the hearts and portfolios of consumers across the nation. Chapter 6. Disney. Walt Disney, our fifth stock on the list of top stocks to watch for 2023. When I am considering long-term investments, one crucial aspect I always assess is the company's management team. Disney shines brightly with the recent return of its longtime CEO, Bob Iger. Regarded as one of the most accomplished CEOs in recent history, Iger led Disney through a series of immensely successful acquisitions, including Pixar, Marvel Entertainment, and Lucasfilm. Although he passed the CEO role to Bob Chapek in February 2020, his influence and expertise continue to shape the company's trajectory. Disney's recent earnings report in May delivered positive news, with the House of Mouse meeting expectations for both earnings and revenue. Notably, a strategic price hike for the streaming service, Disney Plus, helped offset the impact of a significant loss in subscribers, primarily from its India platform, Hotstar. This move demonstrated Disney's ability to adapt to market conditions and leverage its streaming platform to maintain strong financial performance. While Disney has encountered challenges, particularly with subscriber losses, the company has shown resilience and innovation under its exceptional leadership. As of June 30th, DIS stock has seen a modest 2.8% increase in value since the beginning of the year. This indicates a level of stability and investor confidence in Disney's long-term prospects. With its iconic brand, diverse entertainment portfolio, and strategic focus on streaming services, Disney continues to captivate audiences worldwide. Whether it's the magic of the Marvel Cinematic Universe, the timeless characters of Disney classics, or the immersive experiences of its theme parks, Disney possesses an unparalleled ability to capture hearts and create enduring memories. As we venture into 2023, keep a close eye on Walt Disney Company, DIS. With its talented management team, a track record of successful acquisitions, and a commitment to innovation. So, these are the 5 stocks that I encourage you to keep an eye on in the future. Let me clear myself again. I am not asking you to go and, let's say, empty your savings account and put all that money into Apple. No, don't do that. The purpose of this video is to give my viewers a better understanding of the stock market and encourage them to do their own research, and if you still find a stock worthy of your investment, then you should definitely invest in it. That concludes our video for today. Make sure to take care of your health, stay hydrated, it's getting extremely hot these days, and I'll catch you in the next one.